Yes, your boy Crypto Blood, and welcome to another episode of My Two Satoshis. That's good music to my ears. It's January 9th, 2020. Shout out to my guy out there on YouTube, Sarge Crypto, for the song request, Police State by Dead Prez. We do indeed, I believe, live in a police state, even here in America, yes. If you didn't know, now you know. Hope you guys are doing well. It is Thursday, almost end of the week, people. And one thing before we do get started, if you want to send in song requests and have them prioritized, I know we're about 2 months behind at this point. You can always sign up to be a member. At the lowest level, you'll be able to get prioritized song requests and questions answered by yours truly. And I'll do those questions in a separate series that I call Ask the Block. I'll be doing another one this weekend. Has been a few weeks since I've done one. So I'm going to be doing one this weekend. It'll be exclusively available to members first, and then I'll release it probably during the week or next weekend for the rest of the public. But today we are looking at Bitmain. They're in trouble, and I've said I had my suspicions about them all the way back when they actually filed for an IPO. See, to me, when I hear that someone is looking to do an IPO, it is a gesture or a move to raise cash to essentially liquidate some of their own equity. And in some cases, it's a sign of good. I think in most cases, it's not. When a company is looking to go IPO, 9 times out of 10, in my opinion, they're at the end of their growth cycle. And they're just looking to extend it further with raising debt, or I should say selling equity to the market in the form of stock. So we'll take a look at what's going on with Bitmain, because they've actually withdrawn from this partnership they had with a company out in Texas. This is not good news. And this article kind of poses the question, is Bitcoin Cash going to be in trouble next? Are we going to see selling pressure out of the Bitmain camp dumped onto Bitcoin Cash? I'll let you be the judge of that, and we'll see what this article says out of News BTC. Second article out of Coin Telegraph. We've got a bug out of the alternative compiler that actually Vitalik Buterin created. It's a language called Vyper. We'll take a look at some bugs that the Ethereum Foundation says they've found. Multiple serious bugs, but Vyper Lang, I should say, the team is pushing back on that, saying that they're not bugs at all because they've run their own audits and so on and so forth. So we'll take a look at this. I think this new language is going to potentially in the future replace the Solidity as the language of choice for Ethereum 2.0. It is using Wasm, and we'll take a look at that a little bit possibly if I have time. But essentially, you're trying to get away from the whole Ethereum virtual machine, which is what Ethereum 1.0 is running, and Solidity runs with that. The Wasm is more of a Ethereum version of WebAssembly. This is known to be a better compiler for multiple reasons, multi-threading, so on and so forth. And Eels uses a WebAssembly machine for their contracts, and again, it's far more robust and it's scalable, right? So again, we'll take a look at that if I have a chance to go into detail with that. Last article also out of News BTC. It looks like 99% of altcoin volume, this report says, out of Japan, that's including Ethereum, Litecoin, EOS, etc., is fake. Does not shock me at all. I remember back when we were in the 2017 boom era, kind of toward the end, a report or some type of analysis done that found that dollar for dollar, there were, as far as how the market cap looked, it was inflated by like 50x. Now, granted, this was, I think, coming from Tom Lee. He thought it was $50 to 1 for every dollar. It was $50 inflation on the market cap of cryptocurrencies. We got to take that with a grain of salt. But I do think still today, I still think that there is some type of multiplier effect on the actual market cap. I do not think our market cap is truly at $200 billion or so. I don't think we're near that. Now, that sounds like I'm being pessimistic. Actually, that's a good thing. If the true market cap of the cryptocurrency space is maybe, I would think, half of that, 100 billion, 150 billion, somewhere around there, that just lets you know that this market is so small. Any type of outflows from traditional markets into this market, or spillover is what they say, would be explosive to the prices of many of these crypto assets and coins. It just would, right? So you would see Bitcoin, if things really hit the fan and you saw any type of spillover, yeah, I can see $30, $40, $50,000 Bitcoin easily, right? And the altcoins in percentage wise would even gain more than that. So I personally think that's why I'm heavily invested into this market, because there's no other potential. The kinetic energy, the potential there is better than any other asset class out there. Just put it to you that way. So we'll take a look at what they're saying in this report, though, out of News BTC. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. This episode is brought to you by Eels Locally. No KYC, buy and sell Eels while keeping your privacy. Peer-to-peer fiat transactions through their smart contracts. They're pretty instant too, because Eels is instant when it comes to transactions. No transaction fees on the network or anything like that. So I look at this as like local Bitcoins, but for EOS and EOS related tokens. Speaking of, they do have a new feature here, guys. You can now do more than just EOS. You can actually trade wax and EOS to US dollar, or Tether, I should say, those pairs. So there are 2 more pairs available at your disposal, which is neat. And they told me they'll actually be adding Tron very soon as well. So all you Tron fans will be able to get you some Tron with no KYC directly from eoslocally.com. So check them out, guys. Link in the description below. Let's take a look at this heat map. Kind of a red day today. We've got Bitcoin down almost 1%, under 8,000, 7,941 bucks. We've got Ethereum down 1% flat to 137 bucks. XRP down almost 1% as well. Battling with that 20-cent handle right now. EOS is up, however, just slightly, 0.1% to $2.74. And we've got Binance up 1% to $14.43. Litecoin up 1.2% to $45.21. So let's take a look at the first article. News BTC, Bitmain fall from grace could spell trouble for Bitcoin Cash, they say. It says up until 2018, things were looking bright, having posted first half profits of almost $1 billion and cemented its position as the largest manufacturer of application-specific integrated circuits, or ASICs. So much so, there was talk of expanding the mining farm operation outside of China and even plans of going public on the Hong Kong Stock Exchange. However, things don't always go as planned, and given the frosty reception from Hong Kong regulators, the company let its IPO application lapse in March of last year. And most recently, in a further sign of breakdown within the company, Bitmain has terminated its management agreement with Texas-based mining firm operator DMG Blockchain. The site of Rockdale, Texas houses 15,000 next generation miners and opened only 3 months ago. This decision calls into question whether Bitmain will follow through with its plans to go public on the NASDAQ. I'm gonna tell you right now, that ain't happening. They are not going to be able to go public on the NASDAQ, in my opinion. Just simply the tone for IPOs have changed. We see what happened with WeWork. They got shut down. A few others that were looking to go public. The sentiment is changing. You have to show profit, or at least better paths to profitability in this environment now, because it's starting to shift. I think we're starting to get top heavy with valuations in the stock market. And, I think this is not a good time to even attempt to go IPO on the NASDAQ for Bitmain, though I'm sure they need the money. Bitmain says in a statement, DMG and Bitmain have mutually terminated the existing management agreement as costs and operational efficiencies have not materialized as planned. It goes on to talk about its power structure within Bitmain. The falling fortunes of Bitmain have resulted in a power struggle between the co-founders. In October of last year, McCree Zahn was ousted from his position as executive director. In addition to that, Wu also unveiled his strategy to allow the bulk purchase of mining equipment with just a 20% of deposit. The Bitmain you are familiar with is back, he said. But sadly, part of this shakeup also means further staff cuts, with plans to cut their workforce. One employee says poor Bitmain employees who have been optimized out trying to protest as their last resort. The banner said protesting against Bitmain's illegal layoffs. So they were cutting people during the Chinese New Year. And people were really, really upset about this. And the CSO of Blockstream, Samson Miles, said that Bitmain actually sold off a substantial amount of his Bitcoin in order to acquire more Bitcoin Cash in 2018, which some speculate was key in popping up Bitcoin's price. However, this move and the resultant war between Bitcoin and Bitcoin Cash backfired, and Bitmain and Wu both suffered greatly as Bitcoin Cash declined sharply against Bitcoin. So my thing is, I'm gonna be honest with you, I think Bitmain is definitely in trouble. They hedged their bets too heavily on Bitcoin Cash. And I've said it before, guys, like these altcoins, Bitcoin is going to be around, I think, for the foreseeable future. as long as they prepare properly to upgrade with quantum resistant protocols. And I think they're going to do that and be able to get most people and most nodes to upgrade with that. I don't see that being a problem. But Bitcoin position and use case has shifted, in my opinion, to just being an asset. None of these altcoins are going to be used as currency unless that altcoin is inflationary. If your altcoin that you like so much is not inflationary, it will never be used to the capacity or to the level that many of you think it will be, simply because of economic forces. When you have a deflationary asset, you're going to suffer from money velocity issues. So people will tend to hoard that particular asset for the future because they think it will go up in price because there is a limited supply of that particular asset. And I just want to really drive this point home to you guys, is that currency is not an investment. So if you're holding or hodling a particular digital asset or cryptocurrency that you think is going to go up in price, you're not treating that as currency. You're treating it as an asset, which I believe most will fall into that category unless it is inflationary. And unfortunately, Bitcoin Cash, Bitcoin SV, if they don't have any additional use case, then they're not going to be able to compete against Bitcoin, because it's the first one is kind of locked in there as the brand, and it's not a currency. It's an asset now. So you really, when you're talking about investing in assets, it's more of a confidence thing from that perspective of thinking that it will head higher. And I think it will. You saw its reaction to the minor event that's happening geopolitically in Iran and Iraq. That pop, almost 10% move altogether. That just lets you know that the market may truly be looking at this as another asset class for as a safe haven. Not as a currency to spend. So we'll have to see what happens. But I think personally, mining is a dead end game over time. Even for Bitcoin, like, we assume that the price of that particular, as for Bitcoin, is going to continue to rise, but we're not seeing that be the trend. We're seeing that the halvings are having less and less effect on the price of Bitcoin. So if that's going to be the case, that means that when miners get half the amount of coins they were getting prior to the halving, it's a dead end game. It's a dead end road. Right? The profitability is going to diminish over time. Like, Bitcoin may go up, but it has to go up at the pace of, or more than the pace of, the halvings. And that's not the trend. The trend is that the price is having less and less of an effect on the halving every time consecutively, if you look at it. So in 20 years, if Bitcoin is around, it's going to be a big boys game. They're going to corner the market. Small people won't even have it's already small people don't have a chance. I don't know. We'll have to see what happens, but mining is a dead end game. That's why a lot of coins are going proof of stake or delegated proof of stake, some type of system that is not proof of work. Second article out of News BTC as well. We've got a report from Japan research group Koji Hagashi that's saying that 99% of Ethereum, Litecoin, Eels volume, etc., basically the altcoins, is likely fake. This research group blasted off exchanges for faking 99% of their Ethereum, Litecoin, and Eels trade volumes. The Japan-based cryptocurrency analyst noted that the degree of fake volume in the altcoins appear more severe than that one in Bitcoin. The study followed impressive price rallies in the altcoin markets. Ethereum, whose token Ether remains the second leading cryptocurrency by market cap, climbed by 20% after bottoming at $116 last December. EOS 2 surged by 26%, while Litecoin was up by 25%. But according to the analysts, traders may have been taking cues from the altcoin's trading volumes before opening their bullish positions. Volume remains one of the major breakout indicators. So in other words, he says, tracking reported trading volumes might give you a wrong impression and can inflate expectations for altcoins. So Hagashi's strategy concluded that 95% of the total reported Bitcoin volumes are fake. Meanwhile, pitting the cryptocurrency against the top 30 altcoins further revealed issues in the altcoins data. And so with his research, it shows that the net true Bitcoin enabled volume came out to be about 10,000 Bitcoins, approximately 70 million on average. At the same time, the nominal volume was around 2.6 million Bitcoins, which is approximately $18 billion. That showed that about 97% of the total reported data was more or less the outcome of wash trading. And we can't forget about China and its dominance Bringing stablecoins into the report further revealed China's shocking control over Bitcoin trades. Higashi claimed that the region hosted more than half of cryptocurrency's fiat-enabled trades. That included a troubling amount of trades for and against USD Tether, a controversial stablecoin. So wow, this is interesting details here. You guys let me know what your thoughts are on just the market cap in general. Is it overinflated? And give me your thoughts on the volume. If the volume is overinflated, then the market cap has to be as well. I don't know, people. Interesting reports there. If not the first time I've heard this, I'm sure it's not the first you've heard of either. Last article really quickly out of Cointelegraph. So these bugs that were found in a readable form of Ethereum smart contract language, which Vitalik Buterin created, called Vyper, but the team downplays the concerns. This was found by the Ethereum Foundation as developers were working on a new implementation of Vyper compiler due to multiple serious bugs in the existing version. The Vyperlang team responded by noting that existing Vyper smart contracts were not affected by these bugs. So again, this Vyper language was created by Vitalik Buterin and is focused on being more human readable as possible, even at the cost of missing some of the more advanced features found in Solidity. But Ethereum Foundation developers explained in a blog post how they gradually became disillusioned with Vyper maintainers. It says, after a few months of work, we were skeptical that the Python codebase was likely to deliver on the idea that Vyper promised. The codebase contained a significant amount of technical and architectural debt, and from our perspective, it didn't seem like the existing maintainers were focused on fixing it. But Vyper maintainers argue that this compile bug was not critical, or the list of compiler bugs were not critical. We'll have to see what happens. But you know, they are trying to, because there are two different versions of this Vyper language. One that is they're working on using the Rust language, and then one that is a Python one, and eventually they want to merge the two into, you know, one consensus language for Ethereum 2.0. But we'll have to see what happens. I mean, they've done the set testing, meaning the Vyperlang team. They say that everything is cool, but I just wanted to give you guys the heads up on that conversation. Again, shout out to my man Sarge Crypto out there on YouTube for the song request, Dead Prez Police State. Oh, and don't forget to get over there to Eels locally too. They've got new trading pairs for you, Wax and Eels versus USD Tether. That's my 2 Satoshis for today. If you found this video informative, make sure you like, share, and subscribe. Click that bell to receive more unbiased news on a daily from your boy Crypto Blood. I'm out of here, people. Holla!